Here's a detailed summary of Zoom's 2025 Q4 earnings call, designed for easy reading aloud. Good evening, everyone. Today, we're diving into Zoom's performance for the fourth quarter and the full fiscal year 2025. We'll be hearing from Zoom's founder and CEO, Yuan, and CFO, Chang. Key financial metrics for Q4 FY 2025. Zoom reported total revenue of $1.184 billion, which is a 3% increase year-over-year, exceeding their guidance by $4 million. On a constant currency basis, revenue grew approximately 4% to $1.188 billion. The enterprise revenue segment showed strong growth, up 6% year-over-year, now representing 60% of total revenue. The company is seeing stability in its online business, with average monthly churn at a record low of 2.8% for a fourth quarter. Profitability was also a highlight. Non-GAAP gross margin stood at 78.8%, slightly lower than the prior year due to strategic AI investments, but offset by efficiency gains. The company remains committed to its long-term goal of reaching 80% gross margin. Non-GAAP income from operations grew 5% year-over-year to $468 million, surpassing guidance. Non-GAAP operating margin improved to 39.5%, an increase of 81 basis points year-over-year, demonstrating strong performance despite ongoing investments. Non-GAAP diluted net income per share was $1.41, beating guidance by 11 cents. Looking at the balance sheet, deferred revenue grew 7% year-over-year to $1.35 billion, driven by refined discounting practices and business growth. Operating cash flow increased 21% to $425 million, and free cash flow grew 25% to $416 million, with strong operating and free cash flow margins. Zoom ended the quarter with a robust $7.8 billion in cash, cash equivalents, and marketable securities. The company also repurchased 4.3 million shares for $355 million in Q4. Full year FY 2025 highlights. For the full fiscal year 2025, total revenue grew 3%, with enterprise revenue up 5% year-over-year, showing acceleration in the second half of the year. Free cash flow grew an impressive 23% to $1.8 billion. The non-GAAP operating margin for the full year was 39.4%. A significant achievement was the reduction in stock-based compensation to 20% of revenue, a 3-point decrease year-over-year. Additionally, Zoom repurchased 15.9 million shares for $1.1 billion. Management's forecasts for future quarters. For Q1 FY 2026, Zoom expects revenue between $1.162 billion and $1.167 billion, representing approximately 2% year-over-year growth. They anticipate non-GAAP operating income to be between $440 million and $445 million, and non-GAAP earnings per share in the range of $1.29 to $1.31. Looking ahead to the full year FY 2026, revenue is projected to be between $4.785 billion and $4.795 billion, a 2.7% increase year-over-year at the midpoint. Non-GAAP operating income is expected to be between $1.85 billion and $1.86 billion, with an operating margin of approximately 39%. Full-year non-GAAP earnings per share are forecasted to be between $5.34 and $5.37. Free cash flow for FY 2026 is projected between $1.68 billion and $1.72 billion. Significant risk factors. While the transcript doesn't explicitly list risk factors in a dedicated section, several points implicitly highlight potential challenges or areas of focus: macroeconomic environment, management acknowledges ongoing macro challenges and uncertainties that could impact performance. Competition. The competitive landscape, particularly in AI solutions, is a recurring theme, with Zoom emphasizing its value proposition and total cost of ownership against others. Investment in AI. While a growth driver, significant investments in AI are noted as a factor influencing gross margins in the short term. Execution risk. The success of new product launches and strategic initiatives, such as Contact Center and WorkVivo, hinges on effective execution. Marketing and awareness. Eric Yuan identified a marketing problem with Contact Center, suggesting that customer awareness and understanding of its capabilities need to be improved. Highlights. AI-first transformation. Zoom is rapidly evolving into an AI-first work platform, with significant adoption of its AI companion. Monthly active users of Zoom AI Companion accelerated by 68% quarter-over-quarter. Agentic AI advancements. The introduction of advanced agentic AI capabilities, including memory, reasoning, and orchestration, with a custom AI Companion add-on for automating workplace tasks. Strong momentum in new products. Contact Center achieved its largest ARR deal in history with a Fortune 100 U.S. tech company for over 15,000 agents. Customers with over $100,000 ARR grew over 100% year-over-year. WorkVivo had a record quarter with customer growth of 89% year-over-year, signing 3 deals over $1 million ARR. Zoom Workplace wins. Secured a significant win with Amazon, further strengthening the relationship with AWS. Partnerships. Mitel partnership to access 70 million global end users, and the strategic migration partnership for Meta Workplace. Financial performance. Beat top-line and profitability guidance for Q4, with strong free cash flow generation. Customer value and stickiness. AI Companion is making services sticky and demonstrating real value to customers, especially for lower-end SMBs. Enterprise growth. Continued stability and growth in the enterprise segment, with customers contributing over $100,000 in ARR, making up 31% of total revenue. Lowlights. Gross margin impact. Non-GAAP gross margin was slightly lower than the previous year due to strategic investments in AI. Online business flat to down guidance. For FY 2026, the online segment is expected to be flat to slightly down, with enterprise being the primary growth driver. Enterprise customer count metric change. Zoom will no longer report enterprise customer count as a standalone metric, deeming it less reflective of performance than enterprise revenue growth and net dollar expansion. Most important statements from CEO Eric Yuan. Eric Yuan emphasized Zoom's transformation into an AI-first work platform. He highlighted the rapid adoption of Zoom AI Companion as a key driver, enabling enhanced customer productivity and forming the driving force behind our transformation. Yuan spoke enthusiastically about the future of agentic AI, with upcoming features like custom AI Companion and enhancements for specific industries like healthcare. He believes Zoom is uniquely positioned to succeed in agentic AI due to its system of engagement for users, providing exceptional context. He also stressed Zoom's strategy of making complex AI technology simple for users, managing the complexity of AI models while maintaining an intuitive experience. Yuan reiterated the company's focus on delivering practical value and amplifying human potential through AI. He also addressed the mixed but stable macro environment, noting strong enterprise momentum and record low churn in the online segment, while acknowledging ongoing volatility. Regarding Amazon, Yuan stated that Zoom was the best choice for Amazon's employees due to its full workplace platform and superior employee experience. Most important statements from CFO Michelle Chang. Michelle Chang confirmed that Zoom beat its top-line and profitability guidance for Q4. She provided detailed financial results, including revenue growth, enterprise segment performance, and record low churn in the online business. Chang highlighted that enterprise revenue growth and net dollar expansion are better reflections of future business performance than customer counts, especially with ongoing migration strategies. She detailed the strategic investments in AI impacting gross margin, but reiterated the long-term goal of reaching 80%. Chang also discussed the strong cash flow generation, with significant increases in operating and free cash flow. She provided detailed guidance for Q1 FY 2026 and the full year FY 2026, emphasizing that enterprise will be the primary growth driver, while the online segment is expected to be flat to slightly down. Chang confirmed that AI investments are baked into the guidance and that the company is pleased with its margin performance, expecting to offset AI spend with efficiencies. She also clarified that while timing elements can impact free cash flow conversion, the company is focused on balancing revenue growth with profitability and ongoing efficiency. Regarding pricing, she indicated that the $12 per seat custom AI companion SKU is expected to be compelling and that monetization of AI will be a growing factor, with more impact expected in FY 2027. She reiterated that the full-year guide for FY 2026 faces headwinds from foreign exchange and a leap year. In summary, Zoom is navigating a dynamic market with a strong focus on AI-driven innovation. The company delivered solid financial results in Q4 FY 2025 and is setting ambitious goals for FY 2026, underpinned by its expanding AI capabilities and strategic growth in key areas like contact center and WorkVivo. While acknowledging macroeconomic uncertainties, management expressed confidence in their platform, strategy, and future growth opportunities.